Today, I'm going to talk about that Forex supply and demand entry strategy. More, we're going to look at what the class is the set and forget strategy, and we'll also quickly look at the confirmation entry. The understanding of using a Forex supply and demand entry strategy is really finding the best zones to trade from. Now, the way we can do this is we can simply look at using our market structure and applying our zones. Now, we're just going to look at current price here as we move to the upside. If we look at this current area of price, what we can do, we can mark out, okay, this breaker structure to downside, and then we continue to push lower. What I'm just looking for here is a reversal in trend. And we can see here is our first reversal in trend. So we've gone from being in this bearish market to reversing to a bullish market. Now there's a reason we're doing this. Zoom out. We had this bearish move down on a bigger swing. Okay, we can see we had a breaker structure at the same time, right? And that means we have this higher swing, which is classed as a strong swing high. And we're looking really for the market, if we zoom out, as it makes this pullback, to want to run this low. So we now have what we class as trading range. Understanding your trading range is very, very important. That's something that we do go through in a lot of detail, understanding your trading range with those swing highs and lows within that trading coaching experience. What we're looking for now is a reason to look for a buy. So as we break structure here, we can identify we have this as our origin area of demand. And then we have this as we class as our breakout area of demand. Now, on both occasions, price hasn't yet come back to the zones. So we continue with price. We break out again, leaving this as an area of origin demand. Now this time price comes back. So how do we look for a trade here? Well, if you're using the set and forget entry style for the entry system, we just be looking for entry to pull back into this zone created with a stop below the low. And our target would be targeting the week high. Now, once we have this as a target, what you can do, you can look at this as being where you're going to take some off the trade, or you can take all the profit off the trade. Now, if you want to take more profits, what you can do is start looking for the swings to the left, okay, where you can look for potential targets. Now we've got this high here. So you could look to increase them to take out this high and this high. So you could look at taking 3 profit targets if you wish. That is totally up to you, but the entry strategy is understanding the set and forget. Now the set and forget means, okay, exactly as I say, we place our entry once we see this break of structure at the area of demand. Our stop at the low, and we place our targets. Like I said, whether you're going to go for previous swing high targets, or if you're going to just target that previous high created. Now, majority of the time, you will find the price will come into the demand and want to run this high. That's your weak high. It's our strong low of demand. So if you go through that, it's going to give you much better consistency when taking these trades. So again, when we break out here, right, we create this as the last sell to buy. Well, in fact, this actually is the candle. So it'd be this one here. That's our area of demand. Now, price hasn't actually come into this demand yet. So we continue to look at price. And then we break structure here to the upside, leaving this area of demand. Now, prices come back into this demand. Let me just mark that off again. But would you be taking a set and forget buy here? Well, perhaps put your answers down into the comments of this video and tell me if you would in fact be taking a set and forget buy off this area. And I'm going to stop there right now at this point. We'll come back to this at the end of the video, and perhaps you can have a good look at the comments what other people have said as well. So that's the area we're going to look at in a moment. Let's go back in time and let's look at other areas of price. So this is the same thing. We can look at the same thing down here. We can see that price is breaking structure. So we break structure. Where's my high? This is my high of the move. This creates my area of supply. So again, we look at this set and forget entry. Once we see this push down, we'll place our order, our limit order, stop above the high. Once we see the pullback, that is, then our target would be to target this low. Now, why are we targeting this low? Because this low becomes our weak low. This is our strong high up here and our strong area of supply. So we're looking for a continuation of the trend to come in. That's our set and forget entry. That's our target, just over 2 to 1. Now again, you could look to run lower, which means you'd have to look back in time for an area to target. So we have a swing low there you could target, which means you could look to increase that, say, all the way down here for nearly a 4 to 1 risk to reward. So you could take some profit off here, final target there. Again, that's up to you. I'm not giving you that advice. I'm just showing you how you can look to use an entry model using supply and demand. So when we break structure again, we look for the next zone. This is our next zone created. Now, we do come back to the area, but it's not an entry zone I would be taking, not right there. And unfortunately, we don't break out until here. So this pullback I would not be taking either, okay? So this would not be an entry I've taken. We break out again. This is a valid zone. This would be my zone, right? So price does come in above, but again, this would not be an entry I would take, and I'll show you why in a moment. We continue to fall. We do have a pullback here. Now this would be an entry zone area of supply. Now on this occasion, we can see using a set and forget entry, we would have a losing trade. So you could have an entry here, targeting this low, stop above the high, and you can see this would have been a losing trade. Now, what we have to look at is that at this point, what do we have right above this high? Same as we do here. We have right above this high an area of imbalance. So what that tells me is that we could potentially run this high to go into the imbalance above. There's a way that we can look at understanding this before it happens by looking at the imbalance levels. Now, what I suggest doing is going and watching the playlist on imbalances. There's some great tips in there to understand imbalances, and there's also the understanding of liquidity, why we could run highs and swing lows and swing highs. So understanding the imbalances, liquidity, and market structure all comes together with supply and demand. So make sure you watch those playlists. And we can also identify here that when we do sweep through this high, we then break structure. So all we're doing here is, after we broke through this area, this is actually a breakout imbalance zone. And just for this video, I'll quickly draw this out where price came into. Now, it's unfortunate if you were just using an area of an entry on set and forget, you would have a losing trade. But if you'd have used a confirmation entry going down to a lower time frame here, there was in fact an entry off this spike up for a sell to this low. And that's how you increase your risk to rewards. That's how you get better as a trader, by understanding the confirmation entry. So at this point, we've broken structure again. We can mark out this last buy to sell move. Okay, the market does come into it. We do push down, we make a higher low, and we remove the zone. So there's a losing trade. We reverse structure. There it is. We break out right there. Okay, so when we see this, our last sell to buy move is this move here in the market. Now that's already been tested into on this candle when we pushed up. That tells me that this candle here is likely to be the next zone to be respected. Understanding that we already pushed into this zone and we broke structure internally, continue to move up. This origin zone, I'm not expecting price to want to come back. We come very close, but we didn't come back into it. So then we break structure again, head to the upside. What does that leave? That leaves this as a sell zone we can mark out. Now you can see price holds there. And again, we can refine that zone to the last bearish candle. Price comes in and we push up. So that's a good zone that we could look to take a long. We can take a long off this pullback into the zone, into this area. So we just actually drag that across. So when we see this push out, we then look for that long, and it should have been marked there, sorry. And we're targeting this high. Why this high? Because that's now the week high where we see the market runs. So you can see the market pulls back in. It's over 3 to 1 risk to reward, a good trade to take. And we're just following, okay, the sequence here of a break structure, pullback, continuation. All we're following there for entry. Again, that's a good trade. So we had a losing trade over here. Potentially, okay, we had another losing trade again. We used this zone, which got broken through. And then we have a nice winning trade. And again, you could have used this zone, but it's quite a big zone and it wasn't the origin. So this is our next entry. We then break structure again. Where does that leave our new zone? Okay, we have a last sell to buy move zone here. Price doesn't come back to it, okay? So then we see the market breaks out again. Now we do have on the way up here a ready base ready zone. Again, you can watch the videos on those later in this series, this playlist. This is a entry area. You could take a trade if you wish off these zones, but I prefer to look for what I call that confirmation out of these zones, and I'll be looking to target this high. That's all I'll be doing here. Now, this isn't big enough for a set and forget, so definitely I want to be going down to lower time frames to check that. See if we have a good entry. We also have a nice area of imbalance there the market can come back into for a reversal. So again, that we break structure. Our last sell to buy move is down here. That's already been tested by that candle. So we can look at the next one. Again, that was tested on the way out. So at the moment, you would look for that. Price never came back to it. Okay, so came back into the areas of imbalance. And you continue doing the same thing. Okay, we have another breakout to the upside. There's my last sell to buy move. That would be my entry. Off this area, we're going with the trend, targeting the week high. Okay, and the market's just under 2, probably just a little bit smaller, to like 2.5. Okay, risk to reward there. Still a good trade. Now again, you could look to increase that if you look to left full swing highs, but I would stick with a simple strategy of entry, targeting the previous high. So we break out again. Last sell to buy move is in fact this move here. Now you can refine that if you wish to the last candle, but we do come in, we don't run the high, it's a losing trade. Now, is there a way to determine that this is going to happen? Not all the time, but we can look at what we call the internal structure here. We broke this internal structure to the downside. The market came down, we continued to break to the downside and then took out the zone. So you see, using internal structures and those lower time frames will stop you taking losing trades. We're not even gone into that yet. But if you're using just the single time frame with the set and forget, this is how you look at doing it. Now again, on the internal area, we do have these areas being created. We pull back in, we look to target the swing low. Okay, we break structure again. So you can see how if we just take this one across, what got taken out, this acted and worked well. We then, when we broke structure, we kind of have this as a full zone, but I'll probably refine it to this last bullish candle. We don't come back to it anyway, but that would have been the zone, the full zone. So we're going now with that internal structure. We have broken this swing here, but we're going with that internal structure. You can see we have another last buy to sell move. And as the market would have been going for this low. So we had an entry here. Okay, we had a small one there. Probably wouldn't have looked at that the way the market was moving though. And this would have been how I would have taken a trade off that zone, targeting this low. Okay, that's what I look for there. But I want at least a 2-to-1 risk to reward. If I don't get a 2-to-1 risk to reward, I won't take it. But then it's where we can go down to lower time frames. Okay, looking for those entries. So again, this is the last buy to sell move here. And you could refine it to the last bullish candle, even the open of the candle if you wish. But again, this would have been a losing trade. But there was no risk to reward there. You can see how there's nothing there at all. Not using this type of strategy. So this type of entry strategy is how you can quickly just manage trades. So we can identify we do push up. We create a rally base rally. We swing high there, broken. If you're looking at that internal structure now, we break out there. That does leave this full sell to buy move. Okay, very big zone there. Not a zone I really want to look at. And you see this is all being tested. So we'll be using it. So the market pushes up here. We've broken this structure. That's where we start getting the current price. Okay, so we then have really, this is a swing move down, swing move up, internal structure. There is a last move there we could draw. The market pushes down, very internal area there. Okay, but if we're looking at a swing move, we do push up. Okay, this will be your breakout area right there. So we push up, pull back, push up, understanding that internal structure there. So when we do pull back, what we see here is this area of imbalance holding price. Now, this is what we call that sweep, which you'll find more in that other playlist going through liquidity in the market. We do break structure again. This swing low. Our last area we would draw out is this move here. That's our last buy to sell move. So you could take an entry off there if you wish on the pullback. Now that means I would be targeting this low here. Not really a big enough risk to reward for me again. So the point this breaks out, we do have that area just to the left, but it's not an area either that I'd look to trade from. The main reason is we break this structure here. Does look okay, but then we still haven't come off this area of supply. It's a fresh zone. And this is creating what I class the area of liquidity. This is a trend line area of liquidity where the market's going to want to push up and run. We have no liquidity in between this move back. So we create this breakout, which then does leave this last area here we could draw, okay, of supply. The market pushes down. This is our zone. We didn't break out until here. So this would be the low. And again, look, you could look to short this zone, stop above the high, target this low. That's a good trade over 2 to 1. That's another winning trade. We broke structure again. Now, again, this is your last buy to sell move here. Now, there's an entry. You could have caught it. Okay. But we've also got to think at this point with reverse structure. So like I said before, we wouldn't take this entry after we saw the reversal of main swing structure here. That's what you got to take into account. So that's how we quickly go through the chart, understanding that strategy of applying the set and forget with a Forex supply and demand entry strategy. Now, current price, we'll get back to what we said earlier on in the video. Would you be taking a buy here? So did you put that comment in? Did you say yes or do you say no? Let's now look at what's really happening here. So first, we need to identify that we had another break of structure. That did leave this area of demand. That demand has been broken. What breaks demand? It's when we leave an area of supply. So we could look at first, this low was broken here. That did leave this as an area of supply. Market pulled back into supply and we dropped out. And we did what? We broke structure again. Yeah, we're going to come into area of demand and we're going to see a bullish move up here. And yes, we could continue up from here, okay, and break this high. Then continue on with the trend. That is absolutely possible. But with structures, we now have this as the next area of supply. So what we need to see is that the market wants to continue to push lower. Now, what we need for that is liquidity. And this is something that you need to really learn. As we have here an area of, mark it out just quickly for you, area of imbalance. Okay, what we need to see is liquidity inside that. Now we have a swing high created here within this move up. So if we saw push up here to the 50% of the imbalance and a close back down, then I expect to see a continuation lower. If we just continue to run up and run through this imbalance, then we'll break this high, and what we'll see is we'll see a continuation to the upside. That is how we understand liquidity. Now, what we can also do here is we could push up, okay, pull back, one final push up, and then drop away. And we start engineering our own liquidity as we make that pullback. On the way back up here, we have no liquidity, okay? This is engineered liquidity, if it works. Again, that's what it is when we continue to pull back. When we pull back here in this first demand, we failed to go into this demand. We filled this imbalance. This is our engineered liquidity after we broke out and we pulled back. Now the market could be continue up higher here, okay, and we could push through. but we need to see what happens as we fill this imbalance. But I hope down below you left your comment, okay, and you said yes or no, and you stick with that. If you believe this was going to be a sell, then where would you take your sell? Well, for this to be a good sell, we can refine it to this move. We could sell off this level as long as we had that liquidity, or we could go down to lower time frame here and we look for the confirmation. We're able to target this low, so a 7 forget is not good enough. It's not over 2 to 1. So for any trades here, we will go down to lower time frames and we look for that reversal. So that's how we look at using the Forex supply and demand entry strategy. Now make sure you go watch the next video in this playlist series. And don't forget, if you want to learn more on the trading coaching experience and how you can get involved, then check the link coming up right now.